Hey guys, what's up? PipSnipers here, back for another update. Let's take a look here at QNT. Now, I'm going to present both scenarios here, and I was actually looking at this scenario back last year as the worst case scenario, right? But the scenario that I presented most of the time was that this over here was just a broadening wedge, and you have A, B, C, D, and then you have your E wave, and then you pop up like this. So this over here would be your A, this is your B. We're forming it right now, we're just chopping at these lows before you come up for a C, sweeping this external range buy side liquidity above 404, with the draw on liquidity being around 6 to 700. The reason we're saying 6 to 700 is because that is the 2.618, 2.786, 3.618, and 4.236 extension. When you take a fib right from the peak of this range down to the trough. That's the bullish scenario. The bullish scenario states that we don't take out these lows at 41. But now let's look at it in a different lens. What if Bitcoin had a fierce drop? Right? Just like it had not too many weeks ago. What if it had a fierce drop again? And instead of this being a broadening wedge-like structure, what if this was just a distribution range? Because if you take a look at it on the monthly, you can see that every single time the price tried to come up here on the monthly, it failed. This is about 12 times now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's 12 months of rejection. Okay, every single time we come up there. So what if this is acting as a distribution range? And what's going to break the camel's back? Is it one more Bitcoin drop? Is it Bitcoin dominance going higher? This can act, and something that also caught my eye is this perfect diagonal trend line. Usually when you have diagonal trend lines like that, after breaking down from supply multiple times, you usually take these out. So this would be considered our trend line liquidity. Now, I'm not saying this has to happen. I'm just pointing it out because I actually had this idea last year, but I didn't really, it wasn't my base case, mainly because I thought that, quant would actually break above this supply zone. But, we're at the end of the 4-year cycle, if that means anything to you, and we still haven't gotten back above this supply, okay? So, my bias leans more towards this trendline liquidity being taken, dipping below 41, and then forming a range like this. So this is your range. You just form a larger range, reaccumulation structure. So this would be, you can kind of consider this like your A, your B, and then your C. Your B wave would slightly sweep the June 2022 low. That's the most bearish scenario. Okay? And then you go up for your C. So that would be your true reaccumulation range. Or it could even be considered a distribution range. And this over here would be your upthrust after distribution. Right? Because you have a wave 1, 2, 3, 4, 5. Or this would be 1, 2, 3, 4, 5. And this would come down like that. Right? We'll see how it plays out as the price develops. But, so far, looking at how this monthly is behaving, 12 monthly rejections off of this supply, especially this diagonal trendline liquidity, it shows to me that the sellers are very strong. Okay? What I would want to see here going forward, in order to negate the possibility that quant is going to take out these lows, I want to see the monthly come back up here. And when it does come back up here, I actually want to see it come back up here with strength with the whole market. Break above this supply have a monthly close above it, or even a 2-week candle close above it. Let's take a look at the 2-week. You see the 2-week? Can't even get above it on the 2-week. We got above it over here. You know, we had 2 weekly closes above it. But I want to see another 2-week candle close back above this level. And then you can, you know, flip long with the SL at the low, depending on how you want to trade it, if you're trading spot, leverage, whatever, right? So now I'm not saying one scenario has to happen over the other. I'm just giving probabilities and scenarios. But, you know, could come down for a C wave. Whether this is your A, B, and your C, or this is your A, B, and then your C, with your B wave sweeping the the low of June 2022 monthly candle. So it would be a really good buy opportunity. Now, you know, another good strategy in crypto is don't buy falling knives. Just don't. Wait for the price to stop falling and then buy. Because it's so much better to buy into momentum rather than buying into what you think is a low. So that's why I always say, whenever you sweep a range, right? Let's say this is your range low. This is what QNT is doing. This is your range low right here. Whenever let's say you sweep the range low like this, don't become a buyer here. The reason you don't become a buyer here is because it could continue to fall. So you'd want to wait for the price to retract back to this range low and even get an attempt at breaking above it, or a weekly close above it. Then you want to buy. And then you don't want to put it all in one shot. You wait for a retest and then another advance. Then you put in more, right? Not financial advice. I'm just showing you guys how to invest in the crypto market in a more safe way. But yeah, this is QNT. Two scenarios here. Either this is a bullish broadening wedge, take out the trend line liquidity very slightly and then pop up, but I want to see a 2-week candle close above supply. Or this is something a little bit more, or this is, you know, sounding the alarm bells on broader market liquidity in regards to the altcoin space. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out and take it easy. I'll see you guys in the next one.